Let's circle back to that story and welcome in our next guest. Ben Emons is Chief Investment Officer and founder of FedWatch Advisors. Ben, long time, great to see you. It's been a while since we've chatted, but glad to have you on. We've been talking about this Intel story really all show. Shares up almost 8% on this news. But what is it specifically, Ben, that has investors so upbeat right now?
Yeah, I think, Carolina, that it is really a story of a comeback here. And again, good to see you too, because Intel has really missed the boat on the AI infrastructure spending. Right? And in fact, actually, part of the story I think has been that as all that infrastructure spending was going on, it really ate into its addressable market. So Intel therefore is sort of behind and had to cut costs and catch up with that. So this split of businesses is what investors view like, okay, there's a breakup premium here for Intel where it can catch up quicker now and therefore gets itself positioned much better in the race in the AI infrastructure, in addition to that foundry business where they do have, I think, an edge. And it seems that that's maybe where the rebound could happen next year for Intel in terms of its revenues. So I think the breakup is really leading to this rebound in the stock. Of course, it still has to happen and there's a lot of speculation, but it's the first sign of Intel maybe potentially turning the corner. So it's an interesting story because as we all watch this infrastructure spending happening, particularly in AI and data centers, it's really been Intel that's been the big laggard there, despite getting all these CHIPS grants from the government.
Do you trust the comeback story, though? Is Intel too far behind to actually catch up in any meaningful way?
Well, the fact that they're discussing a breakup indicates that is, I think, maybe the, say, more, I would say desperate, but at least an emergency sort of a measure, right? They're struggling to get ahead of the train, so they have to do the more dramatic road, walk that way to get it turned around, and that's indeed where the question is. So, I mean, look, the reaction in the stock is, I think, indicative of those either maybe being somewhat short or speculating through call volumes, as your colleague said earlier. On the other hand, it's maybe that people see the value. Now, I would say, though, that Intel actually trades in the group still not at a significant discount on the forward multiple. It's trading like 26.8 times, whereas the big outperformers like Nvidia or Marvel, for that matter, trading like 33, 37 times. So Intel has also somewhat of a valuation issue here too, right? So I think it's a momentum play here. Where it does depend on if the story actually plays out. Because if it doesn't, then we're back down to the lows.
So Ben, you're Chief Investment Officer. Would you buy Intel at $21.65 a share?
So as I mentioned, as a Chief Investment Officer, I got to think of valuation first and foremost. Is this breakup, which you have to calculate, what's that exact premium? Would that mean indeed a multiple that's actually going to go up towards where Nvidia is, right? Is that where the opportunity is? Because 26.8 times forward multiple to Nvidia 33 times. Nvidia's multiple is really driven by revenue growth, where Intel has challenges still. There's anticipation may turn the corner revenues, but that's still an anticipation. With Nvidia, there seems to be obviously a much more convincing track for that matter. So it does seem to me a bit expensive here still at these levels, but I can't ignore the story. So I would watch it here, see how it consolidates. If it does, then I think I would feel more comfortable buying.
There were also reports that Intel is working with advisors to help fend off any potential activist investor activity. Do you think that these steps from these other reports, the splitting of its foundry business or possibly selling off businesses or canceling some expansion plans, do you think that that's enough to ward off activists?
Maybe not, because it tends to be driven maybe also by activism in itself. Right? They're looking at like the only way you can really turn the business around is by breaking it up. I'm not having too much insight in the actual activist involvement in the company because I'm not so involved that way. But I would think that this story doesn't come to surface for nothing, right? Clearly, there's a discussion going on, and so the speculation is high. And then the question is about like if it does get executed, what will be the true premium that reveals itself from that process, meaning the premium in the stock. And that I think is still very, very questionable and open.
CEO Pat Gelsinger said at the Deutsche Bank Tech Conference, "We respect some of the skepticism we've received from the market. We believe we're up for the challenge." How in jeopardy do you think Gelsinger's job is at this point?
Yeah, it depends on how he can execute it, because it has been for him, I think, really a challenging environment. Right? He had not enough time to really catch on to the AI infrastructure boom, and had to therefore catch up with cutting costs and workforce and other costs, and then dealing with a business, that foundry, that's actually valuable, but it hasn't been able to really really contribute to revenue. So I'm not sure his position. My guess is that today, ultimately, shareholders will appreciate that if the company takes the right measures, that the stock performance improves, and that ultimately will also be for him, Gelsinger, a good sign. So I think it's early days or so to judge where his position will be.
Okay, and you mentioned the valuation might not necessarily seem attractive for Intel, especially compared to an Nvidia. I'm curious, Nvidia is down about 8% this week. Would you buy it at current levels? Would you take advantage of this dip that we're seeing in Nvidia? It's higher today, but down 8.5% this week.
Yeah, the story of Nvidia is actually, I look at it more macroeconomically. I mean, it has a phenomenal business, obviously, and it has the monopoly in GPUs and Blackwell and other chips. So clearly, that monopoly position is yet to be torn at. So it's in a really good position to continue to drive this incredible revenue growth. But as the earnings has shown, it's never going to last forever that way. The anticipation and expectations are too high. On the other hand, there's a real true macro story here. And Nvidia has a real impact on the economy potentially because of all the AI infrastructure being built, essentially driven by Nvidia's performance, at least largely because of all the demand for those chips. So as long as that continues, I think Nvidia is in a good position, and probably this move down in the stock is an opportunity. I do look at the stock though, like these earnings projections are hyped. So I would like to see it being pulled back a little further before I would be enticed here.
Okay. Ben Emons, FedWatch Advisors, thanks so much for joining the show.